When we are raising money for core office funds, it's way more difficult because there's much more competition than, for example, in the healthcare sector. We raised a fund for medical office buildings last year, which was comparably easy, and we have just started to raise a fund for assisted living, which is pretty close, or a mix between kind of classical healthcare and residential. And the investor sentiment is quite positive because it's a new niche asset class, and people believe that the 100 basis points extra you can get are worthwhile the risk.
As my colleague Jeff Ferber, who's here with us today, who's our global head and based in the US, knows, it's my least favorite subject because of some of the returns they've been able to make out of those alternative forms of real estate in the US on, senior housing and that kind of thing. The returns have been nothing short of spectacular over extremely long periods of time. And it's one of the interesting things that, we also are looking a little bit more at these kind of assets. We've got a couple of live transactions on the senior housing and one more medical related for some of our clients. And the yields are, say, 100 basis points or so above what you would expect for more traditional real estate, but it's not a big premium. So I think it will continue to attract capital, and that's why I'm not surprised about the capital flows that they've been observing. But it comes back also a bit to what Purdy was saying before, is 100 basis points right for the risk within those assets? How much operational risk are you taking, at least indirectly, on those? So I'm saying that I do expect it to grow within Europe. I expect we will do more of it. But I think we do have to be very, very careful about ensuring that we are properly understanding the risks that we're getting into when we're buying those kind of assets.